Many people still think that the UAE is a completely tax-free country. I don't want to disappoint you, but this does not mean that a company in the UAE has no tax obligations. Today, if you open a business in Dubai or anywhere in the UAE, you need to understand three things very clearly. First, which taxes may apply to your business. Second, what is the difference between personal tax and company tax? And third, what obligations you have every year to keep your company active, compliant and protected from penalties. At VisaTop.com we often see that people focus only on company formation, choosing the activity, choosing the jurisdiction, getting the license. But the real business journey starts after that, with banking, accounting, tax registration, renewals and early compliance. So let's break it down clearly. Is the UAE still tax-free? The short answer is, for individuals, mostly yes. For companies, not always. The UAE does not levy a personal income tax on individuals. That means if you are employed and receive a salary, there is no standard personal income tax deducted by the UAE government from your salary. The official UAE government portal also states that the UAE does not levy income tax on individuals. If you own a company, operate commercially, issue invoices, sell goods, provide services or generate business income, your company may have tax and reporting obligations. The UAE currently has two major taxes: VAT, value-added tax, and corporate tax. There are also other taxes in specific sectors, such as excise tax on certain products, custom duties for imports, and special rules for large multinational groups. But for most small and medium businesses, VAT and corporate tax are the two key areas to understand first. VAT stands for value-added tax. In the UAE, VAT was introduced in 2018 at a standard rate of 5%, according to the UAE Ministry of Finance. This tax applies to many goods and services at different stages of the supply chain. In simple words, if your company is VAT registered and sells taxable goods or services, you may need to charge VAT on your invoices collected from customers and report it to the Federal Tax Authority. Not every company must register for VAT immediately. For UAE resident businesses, VAT registration becomes mandatory when taxable supplies and imports exceed 375,000 dirhams over the past 12 months, or are expected to exceed that threshold in the next 30 days. This is confirmed by the Federal Tax Authority. There is also voluntary VAT registration. A business may register voluntarily if taxable supplies, imports or certain expenses exceed 187,500 dirhams, according to the UAE Ministry of Finance. So let's make it practical. For example, if your company invoices around 400,000 dirhams per year, VAT registration becomes mandatory, and from that point you must charge VAT and file returns. If you open a small consulting company and your revenue is still below the threshold, VAT may not be mandatory yet. But if your turnover grows and crosses the threshold, you cannot simply ignore VAT. You need to register, issue VAT-compliant invoices, file VAT returns, and keep proper records. If revenue grows and VAT registration is missed, this can create penalties and compliance issue later. Another common confusion is the difference between VAT and TRN. VAT is the tax itself. TRN stands for Tax Registration Number. Think of TRN as your company's tax identification number with the Federal Tax Authority. When a company successfully registers for VAT, it receives a TRN. This number is used on tax invoices, VAT returns and official tax-related documents. So if someone asks, do you have VAT? They usually mean, are you VAT registered? Do you have a TRN? So remember, VAT is the tax. TRN is the number that identifies your company as registered with the tax authority. Why does this matter? Because if you are VAT registered, your invoices must follow proper requirements. They should include the TRN, invoice details, VAT amount, and other required information. If you charge VAT without proper registration, or if you issue invoices incorrectly, this can create problems. And if you are not VAT registered yet, you normally should not just add 5% VAT to your invoice as if you are. At VisaTop.com, the goal is not only to help clients open a company, but also to make sure they understand what comes next, including whether tax registration is needed now, later or not yet. The second major tax is corporate tax. This is one of the biggest changes in the UAE business environment in recent years. Corporate tax applies to business profits, not personal salary. According to the UAE government portal, corporate tax rates are 0% for taxable income up to 375,000 dirhams and 9% for taxable income above 375,000 dirhams. This is very important. The tax is not on total revenue, it's on taxable income, basically profit after allowable deductions subject to the rules. For example, if a company invoices 600,000 dirhams in a year, this does not automatically mean it pays 9% on 600,000 dirhams. The company may have business expenses, accounting adjustments, and taxable income calculations. This is why accounting matters. Without proper bookkeeping, you do not really know your taxable income. And if you don't know this, you cannot properly understand your corporate tax position. A lot of business owners think, I am a small company, maybe this does not apply to me. In reality, even if the tax payable is zero, the company may still have registration and filing obligations depending on its status. As an individual, the UAE does not apply personal income tax in the standard way many countries do. But when you operate through a company, the company becomes a separate legal and tax subject. So, if you are living in Dubai and you receive a salary, this is one thing. If you open a company and invoice clients, that is another thing. The company may need accounting records, tax registration, corporate tax filing, VAT registration if thresholds are met, and license renewal. This is especially important for freelancers, consultants, e-commerce businesses, agencies, trading companies, and service providers. If money comes into a personal bank account and the activity looks commercial, questions may arise. If money comes through a company, then the company needs to be structured and maintained correctly. So the UAE remains very attractive, but it requires discipline. A very common belief is, if I open a free zone company, I pay zero tax. This is too simple. Free zone are still very attractive. They offer business-friendly structures, often easier setup, and in many cases advantages for international activity. But under corporate tax rules, a free zone company does not automatically get 0% on everything. A qualifying free zone person may benefit from 0% corporate tax on qualifying income, but only if it meets the required conditions. The Ministry of Finance has official decisions and guidance on qualifying activities and conditions for free zone tax treatment. So the question is not only, is my company in a free zone? The real questions are, what activity does the company perform? Who are the clients? Where is the income coming from? Does the company meet the qualifying conditions? Are their accounts and documents properly maintained? Mainland companies, on the other hand, may be more flexible for doing business directly in the UAE market, but they are generally subject to the standard corporate tax framework. So, free zone versus mainland is not only a licensing decision. It can affect tax, banking, operations, hiring, office requirements, and long-term compliance. This is why choosing the jurisdiction only based on price can be a mistake. The cheapest license is not always the best license, and the wrong jurisdiction can create more cost later. At VisaTop.com, this is one of the areas where proper planning matters. Mainland, free zone, activity selection, visa eligibility, banking, and compliance should all fit the actual business model. Opening a company in the UAE is not just about receiving a trade license. A company needs a complete operational setup. First, you need the correct business activity. This matters because the activity must match what the company actually does. If your license says one thing, but your invoices and bank transactions show another, this can create problems later, especially with banks, compliance checks, and tax classification. Second, you need the correct jurisdiction. Mainland and free zone are not just different locations. They come with different rules, costs, authorities, office requirements, and business permissions. Third, you need proper company documents. This includes the license, incorporation documents, shareholder details, and any documents needed for visas or bank account opening. Fourth, you need accounting from the beginning. Many people only start thinking about accounting at the end of the year. This is a mistake. Fifth, you may need tax registration. This depends on the company's activity, revenue, and status. VAT registration depends on thresholds. Corporate tax registration and filing should also be reviewed carefully. And finally, you need a bank account. Now let's talk about yearly obligations. Every year, a company usually needs to renew its trade license. If the license expires, the company may face fines, restrictions, or operational issues. From the tax side, companies may need to keep accounting records and file corporate tax returns. According to the UAE Ministry of Finance, taxable persons are required to file a corporate tax return for each tax period within 9 months from the end of the relevant period, and the same deadline generally applies for payment of corporate tax due. If the company is VAT registered, VAT returns must also be filed according to the VAT return period assigned by the Federal Tax Authority. This means a company owner needs to track license renewal, accounting records, VAT obligations if registered, corporate tax registration and filing, banking activity, visa-related renewals, and supporting documents. This may sound like a lot, but in practice it becomes manageable when the structure is clear from the beginning. The common mistakes business owners make in the UAE. The first mistake is assuming that no personal income tax means no tax obligations at all. This is wrong. The second mistake is ignoring VAT thresholds. If your business grows, VAT registration may become mandatory. If you miss the timing, it can create penalties. The third mistake is mixing personal and business finances. If business income goes through personal accounts, it can create confusion, especially for banking and compliance. The fourth mistake is choosing the wrong license activity. A license should match the real business. If the activity is too broad, too narrow, or simply wrong, it can affect invoices, bank approval, and future expansion. The fifth mistake is thinking that free zone always means zero tax. Free zone benefits depend on conditions. They are not automatic in every case. The sixth mistake is not keeping records. Invoices, contracts, bank statements, recipes, and accounting files are not optional paperwork. They are what protect the company if questions arise. And the seventh mistake is waiting until something goes wrong. Many people only ask for help when the bank blocks something, the renewal is due, or tax deadline is close. A better approach is to plan the company properly from the beginning. So, if you need any support, the VisaTop team will provide the best options for your business setup and paperwork. A good UAE company setup should answer 5 questions clearly. First, what does the business actually do? Second, where will the client be located? Third, how will the company receive money? Fourth, does it need visas, employees, office space or banking? Fifth, what tax and yearly obligations will apply? If these questions are answered before opening the company, the setup becomes much smoother. For example, a freelancer providing services to international clients may need a different structure from a trading company importing goods into the UAE. An e-commerce business may need different tax and banking considerations from a consulting company. A free zone company serving international clients may have different issues from a mainland company working directly with UAE customers. At VisaTop.com, the goal is to help clients look at the full picture, not only the license, but also the visa, activity, jurisdiction, banking, and yearly obligations. Because the right setup can save money, the wrong setup can create hidden costs. So, which taxes are due in the UAE? For individuals, there is generally no personal income tax. For companies, the main areas are VAT and corporate tax. VAT is generally 5%, and registration becomes mandatory when taxable supplies and imports exceed 375,000 dirhams. Corporate tax is generally 0% up to 375,000 of flexible income and 9% above that. Free zones can still be attractive, but 0% treatment depends on specific conditions. And every company needs to think beyond formation, accounting, renewals, tax registration, filing, banking, and ongoing compliance. The UAE is still one of the best places to start and grow a business. If you are planning to start a company in the UAE, or if you already have one and are not sure about your tax and yearly obligations, contact VisaTop.com team on WhatsApp. They can help you understand your options, prepare the right documents, and plan your company setup properly from the start.
VisaTop.com